Valentin, let me first ask you what you make of the flattening yield curve. Typically, we talk about a flattening curve indicating the coming of a recession. Is that the case right now?
Well, there's a mix of factors, and I have to say, and certainly consistent with what you just mentioned, quite a few clients do see the flattening Treasury yield curve as a precursor of U.S. recession, potentially as soon as mid-2020. And I have to say that the number of clients that are actually thinking that has increased since, say, last year. At the same time, talking to, really just listening to the Fed, really the view there still seems to be that other factors really like flow, demand for the long end, combined with some issuance at the front end, maybe among the contributing factors, the fact that term premia are still super low, given the, I would say, credibility of the Fed's inflation targeting regime. I guess the jury is still out, but I think what's concerning for the Fed, I think, and should be down the road, is that a growing number of clients do seem to think that following the brisk pace of growth we're seeing in the US this year, potentially first half next year, the payback time will come whereby the US economy may decelerate quite sharply and ultimately enter a recession really by mid-2020. So this kind of thinking, if that continues to be communicated to the Fed, that could serve as a brake for the Fed really on their path towards further policy normalization.
How much do you expect the Fed to increase rates by? What's your expectation for the terminal rate?
Well, we think that it's going to be a bit lower than the Fed is expecting. We actually think that the curve will really reach 0 basis points, or indeed 2 cents, for example, will really be completely flat at some point next year, late 2019. And at that time, we think that the 10-year Treasury yields could be closer to 3.5%, but the risks are on the downside. So from that point of view, we think that as a result, the scope for further really Fed rate hikes may be more limited, especially over the longer term, 2020 in particular, than the Fed is hoping at the moment.